Okay, so this is the second part of chapter 1. Let's talk about risk. So risk is the probability that we're going to have a loss, right? It's the uncertainty that we have in the future. All business decisions carry risk, right? So risk is one of those things that we are going to have to deal with. Um, there is a relationship that says that the more risk we take, the higher the expected return. So if you expect to make a lot of money really quick, you certainly will have to take a lot of risk, right? A lot of risk. Now, financial assets. We talk about stocks, bonds. It's one of those assets that it's something that we own. Its value is determined by future cash flows, right? Why would we invest in Apple? Well, because we think Apple's going to make a lot of money in the future, right? If we don't think Apple's going to make money in the future, we don't invest in Apple, right? So it is hard to come up with a fair value of financial assets. It is not a very easy thing to do. Now, real assets, on the other hand, it's fairly simple and straightforward, right? If you go and buy a house, well, there's land, there's walls, and there's a roof, so it's easy. Well, it's easier for us to come up with a value of something that we can see and we can touch, right? Gold, machinery, real estate, all of those things are real assets, and real assets are traded in real markets, right? Uh, this is basically as opposed to financial markets. Financial markets are the ones in which we buy bonds, stocks, and other assets. Now, this last concept is very important. Time value of money. Time value of money is very important, which basically means a dollar today is worth more than a dollar in the future. Um, if you had a chance to receive $1,000 today or $1,000 in 10 years, you would receive $1,000 today, right? A couple of things to consider. Well, you can invest those $1,000, and by 10 years, hopefully, you'll have more than that, right? And you will make more than whatever it was originally, and obviously, you will make more than $1,000, and $1,000 in 10 years becomes unattractive. Second thing is inflation, right? Prices are always going up. Things are getting more expensive. So therefore, you can buy with $1,000 today more than what you will be able to buy with $1,000 in 10 years. Right? Therefore, if we receive money today and in the future, or if we invest money today and receive money in the future, we cannot compare those dollars. Those are different dollars. Those dollars will not buy the same amount of goods and services. So therefore, we need to do something about it. Now, finance and accounting. This is a circle. Half of it belongs to accounting. Half of it belongs to finance. Both are very important, right? So when one finishes, the other starts. So accounting is basically concerned about what has happened in the past, right? It's keeping track of all the financial records. Accounting is going to let us know how much we sold, how much we own, how much we owe, and all of those very important things, right? With accounting's information, finance is going to make decisions. Finance is going to decide how to invest their money, right? So both of them are very important. Finance invests the money, and then it generates records that accounting is going to use, and then accounting is going to bring up whatever has happened and so forth, right? Now, finance is also very important in your personal life, right? If you buy a new car, a new house, if you're refinancing, as of right now in 2016, rates are still low. You can save a lot of money by refinancing your house, right? If you have credit cards, if you are saving for retirement, which is also very important, well, that's the effects of financing your personal life. That's your wallet, that's your money that we're talking about. That's the importance of this class. We're gonna know how to take care of our money, right? Now, if we talk about businesses, the way in which we organize now, you go over this in business law. I'm just gonna give you a quick overview. You can be a sole owner or sole proprietor, partner, or corporation, right? In a nutshell, if you are a sole proprietor or if you are a partner, you will be responsible with your personal assets of any liabilities from your business. So if you go bankrupt, you're going to have to pay with your own money. And if that means selling your house or selling your car, well, so be it, right? Because that's the way this is, right? Now, if corporations have something that we call limited liability, so a corporation is liable with until they get rid of all of their assets. If you invest in Apple and Apple goes bankrupt, the most you can lose is whatever money you put into Apple. Can Apple ask you to sell your house or your car to pay its obligations? No, that is not gonna happen. So that's how this works, right? Now, if we talk about the business goals, we are gonna say that they want businesses want to maximize stockholders' wealth. Your stockholders can go anywhere and can invest their money anywhere they want. They don't have an obligation to stay with you. Therefore, in order for you to convince them to stay with you, you need to maximize their wealth. You need to make sure they receive enough money. Otherwise, they'll grab their money and leave somewhere else. So this is an important thing, right? Uh, so how do we do that? In a nutshell, increase the price of the stock. That's the easiest and easiest way so you can measure that. There are other methods. You can maximize your net income, but there's a trick. If you have a lot of credit sales and people don't pay you back, well, accounting wise, you are maximizing your income. Cash flow wise, you're not getting money, right? So you can have notes that are going to say that they're going to pay you a lot of money in the future. If you don't get cash, that is worthless, right? You can minimize your costs, but that also implies that you can be compromising your quality. You don't want that. That's going to hinder your ability to sell. Same if you maximize your market share. If you sell more than the others, well, under which conditions,